Welcome to today's More Report on Thursday the 30th of June with me, Richard Perry, market analyst at Hand Tech Markets. We've got a relatively settled outlook to the markets today. I mean, we had 2 days of significant selling pressure, and this is on the equity markets, followed by basically a bit of a rebound really in the last couple of days. And you're seeing a slight sort of unwinding of that rebound, slightly lower on the equity markets, sort of around sort of 0.25% lower on the European equities, but across forex markets it's relatively settled actually, with a very slight dollar sort of positivity, nothing too significant. Very slight sort of safe haven shift, but nothing too major. The yen is the outperforming currency of the day, for example, and the as I said, the dollar is sort of generally being preferred, but sterling continues to fly around. Really, I mean, it was down around 30-40 ticks in the Asian session and has rebounded and is now up to 30 ticks. So you've still got that sort of same situation that we had yesterday, and I'll talk about this in more detail in the in my analysis of cable. But you had sort of selling pressure through cable in the Asian session, then sort of rebounded in the European session. It's exactly what happened yesterday, and it'll be interesting to see if that continues today. But we're seeing equity markets just slightly unwind a little bit with that, or slightly sort of rebound a touch on the improved outlook for cable. Interesting that we're seeing bond yields still slightly higher, both the 2-year and the 10-year. The oil price unwound strongly yesterday on the back of the EIA oil inventories report that was stronger than expected oil inventories drawdown, and that sort of boosted the oil price. But again today, sort of suggestions that supply issues in Norway and Nigeria are beginning to sort of settle down a bit, and that could regenerate a little bit of production back into the market. So the oil price is slightly off on the day, about 1.5% at the moment, and that is sort of playing into this whole just mild unwinding of risk appetite that had been recovering it last couple of days. But generally speaking, we're seeing markets relatively in sort of consolidation phase, really, and I'll sort of take you through the charts in a bit, but certainly that's what we're seeing at the moment. In terms of what we've got to look forward to today, well, we've got a little bit of UK data, final reading of Q1 GDP at 9:30. Expectation is for 0.4%, which was which is in line with the final reading of last. In line with the second reading. So 0.4%, and then you've got the Eurozone inflation data. Now you had the German inflation data yesterday, coming in basically in line with expectation, and improving back to 0.3% higher. Now the Eurozone wide inflation data is expected to improve back to flat, so 0.0 at 10 o'clock, and then the weekly jobs claims, 267 expectation there, so sort of basically around about the sort of levels that we've seen in the last few weeks. And we've also got Mark Carney speaking today at 4 o'clock, so we'll be expecting some sort of, or markets will be looking out for some sort of lead on possibly monetary policy, but it doesn't seem to be taking on too much focus at the moment. But yeah, it'll be interesting to see what Carney comes out with. So that takes me to my chart today, which is silver. Now we've seen a strong recovery in silver, and it's broken out above these sort of highs of May, June. Now this is interesting because the gold price has already broken out above its equivalent high that it saw in January 2015. That breakout of 1815 resistance was taken out already on gold. The gold resistance was the equivalent at 1306, which was certainly smashed to the upside. 1358 was the high on gold. So gold has already broken out, but silver is yet to make that breakout above that January 2015 high, and again it's just backed away from that slightly. But I would say that we've had a closing move above the closing breakout above the April sort of May June highs. So it does look as though the momentum is strong. 72, 73 on the RSI. Historically, or in the strong run higher in April, got to 82. And you'd certainly say that this is a trending move. So there is the prospect of further upside potential. Look at those stochastics turning around as well. That's strong. Look at the MACD lines, bull kiss and pushing higher. So it's all pretty set up pretty much set up for buying into near-term dips on this chart, and it looks pretty strong. It looks decent outlook on the momentum, so I'm liking this at the moment. Now, so you'd be looking out for sort of holding on to the supports. You've got sort of minor support around 1812, held today. 1817 was the low today, and it's sort of consolidating a little bit, but I think what we could see is it's further test and move above 1850. Now, if I sort of pull back here to the longer term chart, you can see 1850 is a big sort of pivot level on this chart. 1850 reaction lows of 2013 and 2014, and the reaction high of 2015. So a move above that would be a strong signal that the bulls were gaining control, really pushing higher. You've got this uptrend on silver in place as well. So the outlook continues to improve on silver, and little corrections I think are seen as chances to buy, and it looks pretty strong. So it looks positive for further upside, probably towards $20 if it did make that breakout above 1850. Near term, as I said, you've got a nice sort of band of support between sort of, well, really the breakout at 1780, which was the an old resistance, 18 figure, and 1812. So you've got some nice supports in place there, so it looks positive for further gains, and little corrections, little minor intraday unwinding moves are being bought into. So I wish you good luck in your trading on silver, and I'll speak to you later.